11 big banks, including JPMorgan Chase, Wells Fargo, Goldman Sachs, Morgan Stanley, and more, announced last night that they would take the somewhat theatrical step of depositing $30 billion worth of uninsured deposits into the troubled First Republic Bank. But even that move, along with the introduction of the Fed's latest bailout window, might still not be enough to quiet concerns about just how stable and safe the U.S. banking system really is. Just this morning, as we go to air, even with yesterday's rescue still in the headlines, we're seeing First Republic stock trading down nearly 25%. Zach, we've had a backstop, a lending facility that lets banks basically exchange get their cash back for bad investments made at essentially the best terms. And now the big banks are throwing cash at the problem also. What do you think it will take for the regulators to restore confidence in the banking system? Or is that something that we're not even really expecting at this point?
Well, you know what First Republic Bank doesn't have? The taint of crypto attached to it. That's the thing that stands out to me as it relates to its ability to survive while we see Signature be wound down. Obviously, this crisis is one of confidence. If you look at people who are researching this issue, pretty much all mid-sized banks are having this issue, right? They bought bonds that are now worth far less than what they were marked as on their books, right? So clearly, I think people are worried that this could spread to other banks across the country, not just those in California who service tech firms, but again, those who, have customers who are looking to find yield and who are realizing that in this interest rate environment, they can go elsewhere to get yield and they can take that money out of a bank quickly in the palm of their hand and deposit it in a money market account. They can deposit it with treasuries at their own will, right? So I think clearly what we're seeing is a response to sort of this systemic reality in which we now find ourselves in, where money is moving as fast as it ever has, faster than ever indeed. And all of a sudden, billions and billions of dollars are being drawn out of these banks in hours' time. It's quite remarkable, and I think that's why we're seeing sort of these remarkable steps be taken, both from the public and private sector, at least in this instance. David, curious for your thoughts on this one for sure.
Yeah, I definitely wanted to jump on that point about money moving fast, right? And I wanted, it's fascinating, and obviously this is a very real situation that I don't want to over-intellectualize, but it's fascinating to look back on the last 18 months in crypto and see that the same things are now happening in mainstream banking with particularly hot money, or what you might call rotator capital, whether it's driven by seeking higher yields elsewhere or fear. People are able to move a lot of money around fast, and that has serious consequences for the people managing it. And I guess I also wanted to, kind of add a little bit to the question of confidence. The question for me here still is, is this actually something where signaling and confidence are the key issues, or is this just math and the consequences are kind of inevitable here? And it looks like Adam maybe wants to jump in on that one, so I'll throw it over.
Yeah, I mean, so we've seen, I forget actually where the statistic came from, but we saw a couple of days ago that banks broadly are sitting on roughly $600 billion of these losses. And these losses are not necessarily, you can blame the banks for it, but I think it's a much more realistic way to look at it that you should blame the interest rate environment for it, right? Effectively, what the U.S. central bank and the government has done, and this isn't restricted to the U.S., but it's been worse in the U.S., has pushed up rates so far, so fast that anybody who has a long-term outlook, like an insurance company or a pension or a big bank, these places typically are making long-term decisions based on historical precedents. And when you're literally just making up the monetary policy rules as you go along on a month-by-month basis, that's not a particularly predictable environment where the past can tell you a lot about the future. In fact, the opposite is usually true. And in fact, that's what we've seen here today. So this is sort of like the arsonist now running along and trying to put out all the fires that they inadvertently created, which were fires that they created accidentally in the first place, trying to put out the last batch of fires before that. And, again, the Benny Hill music just plays in your head without even saying anything. This is a very unfortunate situation in that it involves real people's money. And that is a tragic thing. But the reality of it is that the reason why the banking system seems to be teetering is because the banking system, contrary to what we've been told over the last 10 years across multiple financial crises, actually hasn't had any sort of meaningful improvement that has changed the underlying problem, which is that to the extent that people want their money back and lose faith in the system can't really support it. And that's a really, really dangerous reality. And it's the one that I think we find ourselves in today. So it's, to answer my own question, I don't know what can restore confidence here. I think that it needs to be something that's dramatic. And I think that we are likely to get that because we are not seeing efficacy from the moves that have been taken so far. So it will become more politically costly in order to do that as time goes on. And I suspect that is in fact where we still wind up at the end of this, because I don't see another way they solve this problem. Let's see. I'll throw it back to you, David.
Yeah, I'll just make one last point here, which is it is very interesting to see the contrast between as Zach sort of alluded to, between the way First Republic has been handled by this coalition of mega banks, and not just Silvergate, the crypto bank, but also Silicon Valley Bank was basically allowed to languish. And it seems like there were no bidders for it in its sale offer last weekend. But meanwhile, you have 30 billion pumped into First Republic. I don't know exactly what to make of it, but that is definitely a notable contrast. Zach?
Yeah, we saw that reporting yesterday, and we talked about on the show about, Signature. The condition of it being taken over by outside parties is, conditional on them winding down Signet, right? Which was their digital payments rails that serviced a lot of the crypto companies that were, again, 20% of their business. So there are those sort of terms that are already being attached to whatever comes next, that, hey, you can't deal with crypto. And I think that does, again, add fuel to the fire of a lot of these sort of conspiracy theories out there that Operation Choke Point 2.0 is real and is escalating. Can I toss this to Adam for his last thoughts?
Yeah, two just quick notes here. One, I believe that this morning the FDIC actually did come out and deny those anonymous claims, because those anonymous claims, I believe, showed up. I think it was the Wall Street Journal. But anyways, the FDIC came out and rebuked those, said that was not, in fact, a condition there. So maybe they changed it. Maybe it was true before. At least right now, they're saying that it is not true. And then to the point that you made, David, actually, supposedly there was a bidder that emerged over the weekend, and it was one that was approved by the Treasury and was approved by the Fed, but was not approved by the FDIC. And that was taken from, again, some insider comments that came out as a sign that the Biden administration had specific people or specific groups who they would have allowed to make that purchase, but the bidder was not one of them. So anyways, again, so much rumor going on right now, so many whispers, nobody really knows what's true. And again, it's this type of an environment that's so dangerous right now, with so much hot money floating around and so much concern about that.